Good afternoon, everyone. We're just going to give a couple of minutes for everyone to join, and then we'll get started. We'll just give it one more minute, and then we'll get started. Okay, I think most of our participants have joined. For those who join a bit late, the recording will be made available. So good afternoon, everyone, and welcome to our webinar. In today's webinar, we will be looking at a breakdown of the liquidation and distribution account. I'm joined by Tarusha Naidu, and she is from Lexis Practical Guidance. She'll be speaking to how we can use Lexis Practical Guidance to stay up to date with the legal framework and requirements necessary when we do a deceased estate and draft our liquidation and distribution account. So to get started, let's just have a quick overview of what we'll be touching on in today's webinar. So we'll get started with just a better understanding of what the liquidation and distribution account is. And here we'll also be looking at the different accounts that we have within our liquidation and distribution account. We'll be touching on these accounts briefly. We won't be going into too much detail because we don't have enough time in one session to touch on all the detail of all of the accounts. Once we have a better understanding of our liquidation and distribution account, we'll look at some common challenges we face when drafting our liquidation and distribution account, specifically pertaining to the manual drafting and preparation of this account, and the risks involved when we do our calculations and allocations to beneficiaries. Once we've identified some of the challenges, we'll also look at best practices we can institute to overcome these challenges and solutions that we can have in place to make sure we can avoid these challenges. So here we'll be looking at some detailed record keeping, clear communication with our beneficiaries, and how we can utilize technology. So now that we have an understanding of what we'll be discussing today, let's jump right into it and start with a better understanding of our liquidation and distribution account by looking at what exactly our liquidation and distribution account is. So a liquidation and distribution account is essentially a detailed financial statement that provides us with a clear breakdown of all the deceased's assets and liabilities, and also indicates how these assets will be distributed amongst the beneficiaries or heirs. So from this, we can understand that the primary purpose of our liquidation account is to account for all of the assets and to ensure that they are distributed fairly amongst all of the beneficiaries, either in terms of the deceased's will or in terms of the governing legislation. It's important to note that we have to comply with either deceased wishes or the governing legislation when we are drafting the liquidation and distribution account. Non-compliance can lead to financial distress for our beneficiaries. So we know, for example, when we make mistakes throughout the process, it leads to delays. And then the more delays we have, the more money it costs at the end of the day, and the less we have to distribute to our beneficiaries. So how we prepare our liquidation and distribution account is also not something that we can just make up. We have specific guidelines, legal frameworks, and regulations that we have to consult that guide us when drafting our liquidation and distribution account. Again, failure to comply with these laws can result in legal consequences as well as financial implications for the stakeholders of the estate. So it's crucial that we understand that the estate administration and drafting the liquidation and distribution account isn't a choice, it's a legal obligation that has to be carried out correctly. So we'll be touching on some of the legal requirements as we go through the slides, but Tarusha would also, at the end of the webinar, discuss how legal practical guidance can be of benefit when you have to consult these legal frameworks and regulations and stay up to date with them. So let's look next at some of the compliance requirements when we start drafting our liquidation and distribution account. First off, we look at Section 35 of our Administration of Estates Act. And here it very clearly states that an executor must lodge a full account of the administration of a deceased estate with the master within 6 months of his or her appointment. So this full account that Section 35 refers to is, of course, our liquidation and distribution account. And we know, a lot of us who are in practice and deal with the master's office quite regularly, that this 6-month period isn't always achievable. So Regulation 6 also makes provision that we can ask for this period to be extended on application to the master. So now that we understand why we have to submit the liquidation and distribution account, let's look at the regulations that guide us to prepare the liquidation and distribution account. Here we look at Regulation 5.1, and Regulation 5.1 sets out the accounts that we need to include in our liquidation and distribution account. It also gives us further guidelines of exactly how the liquidation and distribution account should be drafted. From Regulation 5.1, we can see our liquidation and distribution account must have the following. So it needs to have a heading. It needs to have a money column, a liquidation account, a recapitulation statement, a distribution account, an income and expenditure account, a fiduciary assets account, an estate duty account, and a certificate signed by the executor. So from the outset, we can see it's quite a complex account with a lot of different accounts inside of the liquidation and distribution account. So next up, we're going to go through these different requirements one by one. We won't be going through our estate duty account because it's quite a cumbersome account and it would take up a whole session on its own. But if you guys find this session helpful, we can look at doing a separate session for a estate duty account as well. So let's jump right into our heading. So the heading is regulated by Regulation 5.1a. You guys still see there was a poll question that just popped up. If you guys don't mind just answering those questions. And then I'll continue with the heading so long. So Regulation 5.1a requires a heading for the account, and it also gives us the minimum required information that we need to include in this heading. So this is a guideline, but it's also a requirement. So even though we include all of this information in the heading, we can include additional information in the heading, but as a minimum standard, all of this information needs to be included. So the effect of not including the required information into our heading is that the master might reject the document, or the master might raise a note, and then the document will have to come back to you. You'll have to edit it and send it back to the master for approval. This causes quite a delay. So one would think that it might be a week or two, but it could end up being a couple of months delay. And again, the financial and legal implications sometimes hit the beneficiaries and the other stakeholders very hard. So let's look at the minimum requirements for our heading. So first off, we must indicate in our heading that this is a liquidation and distribution account. We also need to include an ordinal number for our liquidation and distribution account. So we need to indicate whether we're dealing with our first, second, third, etc. distribution account. And we also need to indicate whether it's a final, a supplementary, or an amended liquidation and distribution account. So the term we use here would depend on whether the account has been advertised for inspection, or whether we've discovered new assets, or whether any party has requested an amendment to the final to the liquidation and distribution account. We would also have to include the full name and surname of the deceased, as well as the identity number and the date of death. Where the deceased is married, we also need to include a marital status, either widower, divorced, married in community of property, or out of community of property. Important to note here as well, where the deceased was married in community of property, the heading also needs to include the full names and the maiden names, as well as the identity number of the surviving spouse or spouses. And if the deceased was married out of community of property, we need to state whether the accrual, the marriage was subject to accrual or not. So you'll see with the marriage out of community of property, it's not necessary for us to include the names and identity numbers of the spouse, but we do need to indicate whether the accrual system was applicable. Where we have a massed estate, we also need to indicate that there has been massing. And if the survivor adiated, there also needs to be an indication of the adiation in the heading. And we need to include the full names and the identity number of the survivor who adiated. Lastly, we also need to include a reference to the master's office, as well as the master's office reference number that will be supplied by the master's office. Again, the executor can include any additional information they might find relevant in the heading, but Regulation 5.1a gives us the minimum requirements of information we have to include. Let's just look at a few examples of our headings. So here we'll see a heading for an unmarried person. We'll also see a heading for a person married in community of property, where we include the marital regime, as well as the name and identity number of the surviving spouse. And we also have an example of a marriage out of community of property with accrual, where we also include the marital regime and an indication that the accrual system applies. Now that we better understand our heading, let's look at some background on our liquidation account. So our liquidation account makes up the bulk of our liquidation and distribution account. It's also the most important part of our liquidation and distribution account, in that it records all of our assets and all of our liabilities that form part of the estate at date of death. These assets and liabilities are also recorded in detail so that they can easily be identified from the liquidation and distribution account. Our liquidation and distribution account is then split into two parts. So in our liquidation account, we have our assets. And in our assets, we include all immovable property, which relates to property, movable assets, which relates to personal effects, vehicles, any movable property, any claims in favor of the estate, like bank accounts, insurance policies, anything with a monetary value, and then shares, of course. The second leg of our liquidation account is our liabilities. And in our liabilities account, we include all of our administration expenses, which are expenses we incur when administering the estate. And we also include any claims against the estate or any creditors that the deceased has at date of death. Additional things we can include underneath our liabilities is any maintenance claims, claims in terms of the Marital Act, and the estate duty, although it has a separate account, we do indicate the estate duty payable in our liquidation account as well. So here you can see we basically have a plus column and a minus column in our liquidation account, our assets being all of the pluses and our liabilities being all of the minuses at date of death. So important to note with our liquidation account as well, there are a few assets that we don't include in our liquidation account because they would either be included in a separate account in our liquidation and distribution account or because they are excluded in terms of legislation. So one of the first ones is assets over which the deceased enjoyed a usufructuary. We don't include this in our liquidation account because this will be included in our fiduciary assets account. Similarly, we don't include any assets over which the deceased enjoyed a fiduciary interest. This would also be included in our fiduciary assets account. And any life insurance policies over the life of the deceased, where there is a nominated beneficiary on the policy, will also not be included in our liquidation account because that policy will not pay into the estate. Rather, it would pay to the beneficiary. So we can also look at some important calculations we have in our liquidation account. So the liquidation account and our recorded assets are used to calculate our master's fees and our executor's remuneration. So this is done by taking the gross value of our assets. So master's fees, firstly, are calculated by taking the gross value of our assets as recorded in our liquidation account. And we then use a sliding scale, which is contained in Schedule 2 and is updated from the master as the master deems fit. The last update done by the master was in 2018. So depending on the value of the estate, different master's fees would apply. Important to note here, there are no master's fees payable on an estate with a gross value of less than 15,000. And there's also no master's fees payable on a Section 18.3 estate. A Section 18.3 estate is just an estate with asset value less than 250,000 Rand. Also important to note here that a maximum fee of 7,000 Rand is payable as our master's fee. We also have our executor's remuneration. And again, we use our liquidation account by looking at the gross value of our assets And the executor's remuneration can then be determined either by looking at the will of the deceased or by looking at section 51(1)(a), read with Regulation 8. So where we have a valid will, the deceased can indicate a percentage in the will at which executor's remuneration can be levied. But if there's no will, or the will is silent on the executor's remuneration, we use section 51(1)(a), read with Regulation 8, which shows us that we use 3.5% of the gross value of the assets reflected in the liquidation account and fiduciary assets account, plus 6% of the gross value of any income generated after the date of death. And this will be reflected in our income and expenditure account. And that will make up our executor's remuneration. Of course, if you are a registered VAT vendor, you can also levy VAT on the executor's remuneration. So next up, let's have a look at our recapitulation statement. Now that we've listed all of our assets and liabilities in the estate, we use our recapitulation statement, also known as our cash recapitulation statement, to determine the liquidity of the estate. So the recapitulation statement is drawn up to determine whether we have cash available in the estate. So therefore, all of our cash assets, or our assets that have been reduced to cash, are recorded in our recapitulation statement account. So where we have a shortfall then, in other words, we don't have enough cash available in the estate to cover our liabilities and our estate duty, the estate might still be solvent, but just illiquid, meaning that we have an asset value higher than a liabilities value, but there's not enough cash on hand to cover the liabilities. What happens in this instance is we'd have to indicate in our cash recapitulation statement that we have a shortfall and how we plan to deal with the shortfall. So there are two ways the executor can deal with shortfall. If the beneficiaries do not want to sell off any of the assets to reduce them to cash, they will need to cover the shortfall required to pay all the estate's liabilities, cash legacies, and the estate duty. If the beneficiaries don't wish to pay in the shortfall so that they can receive transfer of the assets, the executor will have to sell off some of the assets to cover the liabilities, the estate duty, and the cash legacies. Okay, so the executor must then, in our cash recapitulation statement account, indicate how they intend to deal with the shortfall. Where there's a surplus, in other words, we have more cash available than we have liabilities in the estate, the cash surplus must be reflected as part of our residual award in our distribution account. So the surplus will then be awarded to the beneficiaries in our distribution account. We also just have an example of our recapitulation statement. You'll see we just total all of our cash assets, and then we less all of our expenses and our estate duty, and then we either have a shortfall or a surplus available for distribution that will be dealt with in our distribution account. So let's have a look at what exactly our distribution account is. So the distribution account is required in terms of Regulation 5(1)(e). And essentially, after we have all of our assets and our liabilities recorded in our liquidation account, and we know how much cash we have available, we can start determining how we're going to distribute these assets and cash amongst our beneficiaries. So firstly, we need to reflect a balance for distribution, which we calculate by taking the gross value of our assets, less our liabilities, less our estate duty, which we've indicated already in our cash recon. Secondly, the distribution account then sets out exactly how the balance for distribution is awarded to the respective heirs or beneficiary. It's important to note here that in our distribution account, we need to make specific reference to who is receiving a specific asset, why they are receiving that specific asset, and what exactly they are receiving. So if we look at who, we always indicate who first. Here we indicate the full names and the surname of the beneficiary. And we also indicate whether the beneficiary is a minor or a major. Additionally, where the beneficiary is a minor, we also need to include their identity number or their date of birth. Again, these are the minimum requirements. You can include additional information if you deem it necessary. These are just the minimum requirements. Once we've indicated who, we indicate underneath their name why they are receiving this distribution. So this can either be in terms of a will or in terms of the Intestate Succession Act. When we indicate it's in terms of a will, we need to stipulate the clause in the will, the date the will was signed, and a reference to the will. And where there is no will, we need to include that it is in terms of the Intestate Succession Act. And we can also include the reference to that specific section in the Intestate Succession Act. So at the bottom there, underneath why, you'll see I've just given you an example of what that wording would look like. And then lastly, now that we've indicated who would be receiving the distribution and why they would be receiving it, we also need to list exactly what they will be receiving. So underneath that beneficiary's name, we then list all of the assets awarded to that beneficiary. And we also list any cash amount awarded to that beneficiary. So now that we have a better understanding of our distribution account, we can have a look at our income and expenditure account. So in our liquidation account, we've dealt with all of our assets up unto date of death. In our recapitulation statement, we've dealt with all of our cash assets. And now we've already distributed those assets in terms of our distribution account. When we get to our income and expenditure account, we look at regulation 5.1F. And in our income and expenditure account, we deal with any income earned or expenses incurred after date of death, because we haven't dealt with these in our previous accounts yet. So we start a new account, our income and expenditure account, and we write up all of our income earned after date of death, and we write up all of our expenses paid after date of death. And then we balance them in our income and expenditure account. And then all of our income earned after date of death, less all of our liabilities incurred after date of death, is then distributed amongst the heirs in the same proportions as contained in the will or the Intestate Succession Act. So essentially, our income and expenditure account is a smaller liquidation and distribution account within our liquidation and distribution account that only deals with our income and expenses after date of death. So let's look at an example of how the distribution in our income and expenditure would take place. So where A, for example, inherits a property in terms of the will, which we have distributed in our distribution account, any rental income generated from that property after date of death will form part of A's inheritance and should be distributed to A in our income and expenditure account. Where that same property has, for example, been divided proportionately between the beneficiaries, the balance received from that property in our income and expense account will be distributed proportionately between those beneficiaries. Important to note here as well, even when we have no income or expenses in our estate after date of death, we still include the heading income and expenditure account in our liquidation and distribution account, and we just indicate that there was no income or expenses after date of death. Next, we can have a quick look at our fiduciary assets account. So again, similar to our income and expenditure account, our fiduciary asset account is a smaller liquidation and distribution account within our liquidation and distribution account. And in terms of Regulation 5(1)(g), we only include assets subjected to a fideicommission in our fiduciary assets account. So this is best illustrated with an example, because in a fideicommission, we usually have 3 parties involved, and it's sometimes difficult to ascertain in which account we reflect the asset at which point. So let's say the deceased bequests a property to B, but the property is made subject to a condition that on B's death, the property will devolve on C, in other words, a fideicommission. When we're drafting our liquidation and distribution account, when we are dealing with the deceased, the property will be reflected in the liquidation account, because at that point in time, that property forms part of the deceased estate. However, when we get to B's death, that property has been subjected to a fideicommission, so it doesn't form part of B's estate. And because it doesn't form part of B's estate, we reflect it in the fiduciary assets account when we do the liquidation and distribution account for B. And then similar to the deceased, when we get to C's estate, this property is no longer subject to the fideicommission, and it has been transferred to C. And therefore, in C's estate, the property is then included in our liquidation account. So the format of the fiduciary assets account should be exactly the same as our liquidation account. We will have our fiduciary assets, any liabilities on our fiduciary assets, and then if we have any balance in that account, we will distribute it separately in our fiduciary assets account, either in terms of the will or in terms of the Intestate Succession Act. Again, any income or expenses generated from our fiduciary assets account will have to be dealt with separately in our fiduciary assets account, because we've already dealt with our income and expenditure now. So we need to include a separate income and expenditure account in our fiduciary assets account that deals only with the income and expenses of our fiduciary assets. So I'm skipping over the estate duty account. As I've explained, it's quite a cumbersome account with a lot of different rules and legislation that plays a role. So we'll look into doing a separate webinar for that. So lastly, let's just look at our executor certificate. So the executor certificate is required in terms of Regulation 5(1)(I), and essentially it's just a certificate by the executor to attest to the authenticity of the liquidation and distribution account that we submit to the master. So the executor needs to include a statement at the bottom of the liquidation and distribution account, which deals with two things. Firstly, the executor must state that the account that is submitted is a true and proper account of the administration of the estate. And the executor must also confirm that all the assets in the deceased estate have been dealt with and accounted for. If there are any assets that haven't been dealt with or any debts owing in the estate, the executor should list these and provide an explanation as to why they have not been claimed or paid. So here's just an example of an executor certificate. Basically just repeats those statements, and it gets signed and dated, and then the document gets submitted to the master's office. So now that we have a better understanding of what our liquidation and distribution account looks like, let's look at some common challenges we face when drafting and preparing our liquidation and distribution account. So as you've seen with us going through the different accounts very briefly, it's a very complex account to draft, and it requires a lot of data to be collected before you can start drafting the account. So it's a very intricate account with a lot of financial documents that require a lot of attention to detail. So we're not only listing all of our assets, all of our liabilities, our income, our expenses, and we're doing calculations, and we're figuring out how these amounts will be distributed. So when dealing with these different types of assets, like properties, investments, personal possessions, and our different types of debts and expenses, we end up having to do a lot of different calculations and a lot of different accounts, and it gets very difficult to keep track of everything that we need to do in a step-by-step manner. We also need to engage with a lot of different parties to collect all of the data required to draft these accounts. So we need to, for example, if we think about it, we need to involve SARS, we need to involve the deeds office, we need to involve people to evaluate the properties, people to evaluate our share certificates, we need to involve the creditors, we need to involve the banks. So there are a lot of people involved in the process, and collecting the data from these different parties is also a back and forth with a lot of paperwork, communication, and follow-up that could lead to delays in our administration process. Some more challenges we face are, of course, the risk of errors. Because we're dealing with so much data and this high volume of documents, there's always a risk that we're going to make an error if we're doing this account manually. So it could be a simple mistake, such as transposing a number, leaving out an ID number, leaving out a date of birth, not including all of our assets or all of our debts, which could lead to substantial delays in our administration process. So we also have compliance challenges. So as you've seen, as we went through the different accounts, we have a lot of different legislations and regulations that play a role. And it's not always easy when you draft this account manually to make sure that you are adhering to all of the necessary requirements and that you are interpreting the legal obligations correctly. And of course, if we don't follow the necessary legal framework, there will be repercussions, not only to our beneficiaries, but also legal repercussions. Preparing this account manually also is a very time-consuming process. So the manual preparation of a liquidation and distribution account can be extremely time-consuming, and it extends the period in which we finalize our administration of the estate. Again, leading to delays in distributing our assets to the beneficiaries, which causes frustration and financial stress. Manually preparing the documents also often causes a lack of transparency. Because we have so many calculations and so many documents we have to look at, it often happens that when one person is dealing with the estate, it's very difficult for another person to pick up from what the other person has done, because a lot of the calculations are being done manually on different pieces of paper, and because we have to verify accounts, debts, assets from different documents, not everyone is always going to follow the process exactly the same way. So this leads to issues with transparency, not only with your colleagues, but also with the beneficiaries and with respective master's offices. It's also very resource intensive to do these accounts manually. So estate administrators or executors may need to dedicate a significant amount of their time just to complete the drafting of this account. And this diverts a lot of their attention away from critical aspects of the estate administration. And there's also a potential for the process, when manual, being inefficient. And of course, inefficient processes can lead to higher administration costs. And this would obviously reduce the value of our estate by incurring unnecessary expenses. Another challenge we face is the risk of errors when we do the calculations and the allocations. So we're dealing with complex financial transactions, and the liquidation and distribution account often comprises of a variety of assets, liabilities, incomes, and expenses. So this complexity can quickly become overwhelming when attempting to prepare this account manually. We often forget in which step of the process which calculation needs to be done. So even though our estate duty is, for example, our last account in our liquidation and distribution account, we do require the value of our estate duty in order to complete our liquidation account, which is our first account, as well as our recap account, which is our second account. We also have tax implications like capital gains tax, and of course our estate duty tax, which is a very difficult calculation that often results in a very complex tasks that can easily be sidestepped with specialized software. And of course, our allocation amongst beneficiaries as well. So as we saw on our first slide, the main purpose of our liquidation and distribution account is to ensure that our allocation amongst the beneficiaries is fair and accurate. So if we do our calculations manually, it does sometimes happen that we don't allocate our assets or our income or our cash assets to our beneficiaries the way it was intended to be allocated. So let's look at some things we can implement to make sure we don't get caught up in these challenges. So for the estate to be effectively administrated, with particular focus on our liquidation and distribution account, there are 3 best practices we can keep in mind. So we need detailed record keeping and documentation before we even start drafting our liquidation and distribution account. So it's important that we maintain meticulous records of all of our documentation, This includes gathering all of our financial statements, any legal documents, contracts, and any other relevant paperwork which we might need to ascertain the deceased's assets or liabilities. We can then also have an asset inventory or register, where we can create a comprehensive inventory of all our assets and include any descriptions, valuations, or the locations of those specific assets. And this inventory should obviously include all of our movable property, immovable property, claims in favor of the estate, and shares. And this asset inventory needs to be updated. So we need to regularly go back to our asset inventory, make sure all of our information is up to date. And if we have any changes to any of our assets information, we need to update our asset inventory. We also need to have a record of all of our liabilities. So similar to our assets inventory, we need to document all of our outstanding debts, our loans, our creditors, any obligations, and any other information relating to liabilities in the deceased estate. We also need to record all of our financial transactions. So this obviously we use for our income and expenditure. We need to keep an accurate record of all the financial transactions related to the estate, including all of our income and our expenses. And we need to maintain a clear trail of all our funds and how they move in and out of the estate. Once again, we need to make sure that these records are updated regularly. So we need to put timeframes in place so we can revisit these records and make sure everything is up to date. If we have all of these records in place before we start drafting our liquidation and distribution account, it will become a much easier exercise than it is trying to find all of these records in different places as we draft our liquidation and distribution account. Secondly, we need to keep clear and open communication with the beneficiaries. So this communication needs to be transparent. We need to communicate openly and honestly with the beneficiaries about the administration process. So share information regarding the progress, expected timelines, and potential challenges in the estate. Beneficiaries are often less likely to delay the process with unnecessary queries if they know what's happening in the process. So it's important that you keep your beneficiaries up to date with what's happening in the process, and they might also be able to help you ascertain information. We also need to explain the accounts to the beneficiaries. So the beneficiaries need to understand what the liquidation and distribution account is, and also how complex the account is. So they need to understand how the assets are being allocated in our liquidation and distribution account and why they are being allocated in this way. It's important to, throughout the process, also address any concerns that the beneficiaries might have. And we need to share the documentation that's used to administer the deceased estate with our beneficiaries. So all of the relevant documentation needs to be shared with the beneficiaries so that they have a clear understanding of exactly why the liquidation and distribution account has been drafted the way it has. Lastly, we can utilize technology to draft the liquidation and distribution account. So of course, a lot of errors creep in when we do our liquidation and distribution account manually. But with technology, we can implement processes that have learned how to avoid these errors. So estate administration software can specialize in the administration process. So at LexisNexis, we have the LexisNexis Estates, which is a workflow program which has been created to help streamline the deceased administration process. And it includes features like automated calculations, drafting of the L&D accounts, and reducing your risks and errors. We also have training and support, so it's important to train yourself on any software that you use when drafting the liquidation and distribution account, so that you stay up to date with the framework of the software, as well as the broader legal framework that the software fits into. So obviously implementing these best practices and leveraging technology can help executives significantly to improve the efficiency and accuracy of the estate administration process. This in turn can lead to a smoother distribution of assets and reduce potential for disputes, ultimately fulfilling the deceased wishes while complying with legal requirements. So now that we've looked at how we can utilize technology, at Lexis, we do have 2 programs that can help you with the efficient estate administration. So the one solution we have is a workflow solution, which is LexisNexis Estates. So I'm going to take you through the workflow solution, just give you a quick look of how it can help you draft these different accounts. And then we'll also have Tarusha give you some background on Lexis Practical Guidance, which can help you with the legal framework and requirements when you're dealing with the administration of deceased estate. So LexisNexis Estates, as I've mentioned, is a workflow solution that assists you with reporting the estate to the master. It assists you with keeping all of your relevant documents in one place, which makes for a more transparent process. It also helps you keep track of your progress. So there are milestone reminders in place that guide you through the process and also remind you of the different time frames that you need to complete the different steps in. LexisNexis Estates also prepares the liquidation and distribution account for you based on the information you've captured. And there is continued training to keep you up to date on the features and enhancements in the system. So let's focus on preparing the liquidation and distribution account with LexisNexis Estates. So you'll see this is what the program looks like. It's a very user-friendly interface. It's quite modern and very easy to capture the data on the system. So for our liquidation and distribution account, there's a few general details that you capture on the system, like our deceased details and any details pertaining to the spouse or the children. And then we create our liquidation and distribution account by choosing our ordinance number. And the system will then, based on the information we've captured, automatically give you an accurate heading for your liquidation and distribution account. And you can be sure that it includes all of the necessary information in order to avoid errors or delays with your heading being incorrect. The system will also do your liquidation account for you. In our liquidation and distribution account, you'll see the system has all of our necessary accounts. It has our assets and liabilities, which makes up our liquidation account. It will then generate your recapitulation account, your distribution account, your income and expenditure account, your estate duty account, and your executor certificate. Capturing the information is also very user-friendly and easy. So if we've already captured our inventory items in our Reporting documents, when we get to our assets, it's as simple as copying over our inventory to our assets. So there won't be any discrepancies between your inventory items and your asset items. You can then also, in your assets, amend any changes that you need to add, and it will accurately reflect on your document, eliminating any errors. We also have our liabilities account, where you'll see the system automatically adds our administration expenses for us and calculates our fees based on our gross value of our assets. We can also add any claims or creditors. So you'll see the system also does our executors' fees. Any assets marked as sold or redeemed will be placed in our recapitulation statement. The system will pick up that we are dealing with cash assets and place them in the correct account. And all we need to do is distribute it amongst the heirs. System will calculate our cash surplus or our cash shortfall and indicate whether we need any amounts to be paid in or any assets to be reduced to cash. Our distribution account is then also automatic. It would automatically calculate your balance for distribution, as well as any surplus or shortfall, and distribute amongst the heirs accordingly. This is what our distribution account would then look like, which again is in line with regulations. And you can be sure that it's accurate. Similarly, we have our income and expenses, where you can properly record any income or expenses. You can keep a detailed record and it will be stored on the system. And we'll pull through the necessary information into our income and expenditure account and calculate our executor's fee accordingly. So now that I've taken you through one of our workflow products, which can help you eliminate errors, keep proper record of everything that goes into your income and expense, into your liquidation and distribution account, and also help generate the liquidation and distribution account according to regulations and legal framework. I'm also going to hand over to Tarusha, who's going to give you some more background on Lexis Practical Guidance, which is also one of our solutions that you can use to make sure that you stay up to date with all the legal framework and requirements when dealing with a deceased estate. Tarusha, if you're ready, you can take over.
Thank you, Gavin. Good afternoon, everyone, and thank you for joining. I hope you've picked up some really valuable information and insights into the liquidation and distribution account and how best you can complete this task using both the Lexis Deceased Estates software as well as the Practical Guidance platform in conducting a liquidation and distribution account. So with the Practical Guidance platform, we have a practice area that specifically deals with trust wills and estates, and within that, a topic dedicated to the administration of estates. Within the topic of administration of estates, we have subtopics, and one of them being the liquidation and distribution account. So you are going to get guidance notes, which is information as you saw on the slides today. That's the information that would be contained in the guidance notes, which would break down the process for you. So if we can just go to the screenshot of that of the UI. Next slide. So this is your practical guidance, trust wills and estates landing page. And as you see, the topic administration of estates, and then within that topic, you'll find the liquidation and distribution account. So the importance of these guidance notes is that it is giving you quick access to the legislation, referenced legislation, and it's constantly kept up to date. So your main source of legislation here would be the Administration of Estates Act 66 of 1965, together with the regulations promulgated under Section 103, which is GNR 473 of 24 March 1972. So those are your two main pieces of legislation in conducting the liquidation and distribution account. And this is always up to date on the platform. So you don't have to, so you know that reference in the sections in the legislation and regulations, you are referencing the most up-to-date version of that legislation. Together with that, there's also references to other legislation that might be of importance. I saw there were some questions with regarding to marital regimes. So the Matrimonial Property Act would govern the relevance of matrimonial regimes, and the references to within those acts are also included in the guidance notes and up to date as well. Besides the legislation references that are constantly up to date and that you have access to, you also have access to case law. So I did see that someone also mentioned Wessels was de Jager. So these pertinent cases are referenced within the guidance notes with a brief synopsis of the judgment and the main points made by the judge. So you also have access to these judgments, and you can view the full judgment, or you can just view the main points that are relevant to the liquidation and distribution account. You also have access to precedents. So for example, a template for a letter requesting to be removed as an executor, or a checklist of documents that need to accompany the liquidation and distribution account. So these are some of the features and resources that are contained within the Practical Guidance Trust Wills and Estates platform, and which you would have access to, and which would be most beneficial in conducting a liquidation and distribution account and ensuring that you are doing so correctly, accurately, and you aren't missing anything, because that is something that also causes a huge delay in winding up of an estate, is when you do not have the correct documentation put together when you send this off to the master's office. So this is just to highlight how the Practical Guidance Trust Wills and Estates can assist you. I know we've gone slightly over time, so I'm not going to go too much into detail, but that's just an overview of what the Practical Guidance platform entails and how it can assist you in the task of completing a liquidation and distribution account. Thank you. Back to you, Gavin.
Thanks, Sarusha. And thanks everyone for joining us today. So I hope there was some insightful information to everyone who joined. If people are still online, please, do you mind popping us any info in the chat if you'd like us to set up some more webinars like these, and to let us know what you'd like us to discuss in more detail. I think we don't have any time left for questions, but we will have a look at your questions, and then we will respond to your questions and pop you an email